The broadcast is now starting. All attendees are in listen-only mode.
All right, everyone. Welcome to the weekly webinar. Just like every Wednesday, we have two webinars today. As you probably know, the first one is at 8 a.m. GMT time, and the second is at 4 p.m. GMT time. This is Neil Green again with you on the weekly webinar. We've been doing it for a long time, twice a day, since we have customers from all over the world, and we want everyone to have a chance to listen to this webinar, talking about the events of the same week. Welcome, everyone. And of course, just like every week, I'm going to talk about the events that are taking place today and this week. You're more than welcome to join us every Wednesday. I see some familiar names here, okay? So welcome, guys, and some new names as well. Of course, if you don't have accounts with us, you're more than welcome to open accounts and join us at FMFX. This service is always for free. You can register to the next webinars by signing in and going here. You see you have news, live webinars, and just join the next webinars that are going to take place next week, and so on and so on. Just as, like I said, every Wednesday at 8 a.m. GMT time, and right now, which is 4 p.m. GMT time. I just want to do a technical check before I start, see that everyone can see my screen and hear my voice. So if you can just write me down, let me know that you have a chat window, by the way. If you have any questions during the webinar, you're more than welcome to ask me, all right? If you want me to clarify anything, I'm here for you. So just write me yes or something on the chat window that I know that you can hear me and hear my voice and see my screen. All right. Anyone has any technical problem? Okay. Good. So, okay, let's start. Okay, this is our homepage, as you probably know, FMFX. Okay. And let's start talking about the market. So what are we going to talk about today? Okay, we're going to talk about Disney, Twitter, and oil. Okay, as you probably know, the earnings season is heading into its final stage. All right, the earnings season started at the beginning of January this year. Right now, it's mid-February. The earnings season, actually, this is the season that takes place every 3 months, once a quarter. All the big U.S. companies that has stock shares out there must hand out reports to us, people that hold the shares. So there are public companies. They share their reports with the public, and we can take advantage of this reports in order to make some profits in the market. So earnings season is heading into its final stage. Market sentiment right now is very, very positive. Okay, the market right now is booming up. All the indices, all the stock, everything is going up since Trump was elected. Talked about tax cuts, and about government spending, and so on and so on. So the market right now reacts strongly with a very high uptrend. Okay, just to show you what's going on in the market right now. All right, let's take a look on what is it? This is the Dow Jones, for example, daily chart. This is the elections. It's a daily chart. It means that each candle that you see here represents 1 day. All right, a green candle means that the price of the 30 stocks with the highest value in the United States, this is the Dow Jones, the oldest index, are going up. And when we see a red candle, it means exactly the opposite, that it's going down. So as you can see, the Dow Jones is going up right now. In the past few days, this is a weekly chart. Take a look. Booming up, right? Across 20,000, which is the highest point ever. Back to the daily. Let's take a look on NASDAQ. Represents the 100 companies with the highest value in the United States. Same thing. Highest point ever in history. Same thing with the S&P 500. All right, so the market is booming up right now, and everything. It's the best time to go into the market. Actually, if you've never traded before, okay, whatever you buy, you make money in this market these days. So just for you to know. Okay. Market sentiment is very positive, as you saw. The fear index, VIX, is trading close to its all-time low. Now, the VIX The VIX actually is the index of fear, right? When VIX was created on 1986, okay? When VIX is traded high, it actually means that there's a lot of tension, a lot of uncertainty in the market, and people don't really know what to do, what to invest on, and it's not a safe haven, all right? When VIX is traded low, right, it means not a lot of tension, everything is certain, okay? It's pretty easy to trade because these days whatever you buy you make money. Just to show you the VIX, all right, how do you know? You go to the indices, this is the VIX. On daily you see very low. If you take a look on monthly, okay, the lowest point ever around here, okay, traded around 13, 14 points, very, very low, as you can see, and not a lot of tension in the market. Everything is pretty clear, so it's pretty easy to trade these days, all right? Markets are trading at all-time highs, as I just showed you. The S&P, the Nasdaq, Dow Jones, and the rest of the indices traded at all-time highs. More than 70% of the S&P 500 companies beat expectations on their reports, okay? This is why the indices are, they're representing the stocks, and when all the companies are handing out great reports, as we had in the last few days, okay, you would see that everything is going up. Let's take Apple, for example, or Facebook, or whatever. Let's put it on daily chart, just to show you right now. Apple had a great report, boom, booming up. Facebook, same thing, booming up. Whatever, you just choose a stock, everything right now, banks, Citigroup, Goldman Sachs, everything right now is in an uptrend, okay? Caterpillar since the election, Rebuilding America, boom, going up, okay? Google, the market right now is very, very strong, okay? And since Trump was elected because of his policy and because of other reasons, what happened with the interest rate and so on and so on. So more than 70% of the S&P companies beat expectations. This is why the market right now is traded very high, okay? All right. Now, Disney reported yesterday, its earnings yesterday. The stock was down 0.5% in the pre-market trading. Actually, they had a better EPS, earning per share. Okay, the EPS, when we talk quarterly, we have a report once a quarter. Now, the EPS is actually taking the whole revenue of the company divided by the number of stocks, and then we get the earning per share, the whole earnings divided by the number of stocks. Earning per share is the EPS. The EPS expected of Disney was $1.44, and the result, when we looked at the report, is 1.56, which means it was more than expected. But as I talked on last webinars, in order to show you, and I showed you that we have to look at other things, and the most important things is not only the EPS but the specifics, the key numbers. If I want to trade on Apple, what do I want to look in the report? Okay, I want to see how many new iPhones, Facebook, how many new subscribers, and so on and so on. When I trade on Disney, as you know, since Mickey Mouse, they did a lot, okay? The company reported a drop in cable TV revenue. Okay, the main challenge for Disney is cable networks, okay? They own ESPN and ABC. Now, the shift to live streaming, everybody's going live streaming. Companies like Netflix and Amazon is hurting Disney revenue from cable TV, which is mostly the heavily part of the entire revenue of Disney. And if, as you probably know, if everybody's going live streaming because it's cheaper, okay, Disney, look what happened to Disney. It went down by 0.5%, which is not a lot, okay, but still, this is yesterday and then today, and then started to go up. Still an uptrend, but nothing special happened here. Looking at Netflix, for example, the stock is going up. Here is the report. Boom, great report, and it's climbing up because of the live streaming. Okay. Twitter will report on Thursday, which is tomorrow, after the market is closed. The stock right now is trading around $18. Let's take a look at Twitter. $18, 18.32. They had bad reports before. All right. And right now, let's talk about it generally and just show you. Twitter right now, they're going to report tomorrow. Now, they trade around $18, as I showed you. Twitter's main challenge is user growth. Okay, they make money if they have more subscribers, more users, which is for free. They can publish to more people based on commercials. Now Facebook, their opinions, has 2 billion users, while Twitter has only 310 million, which is not a lot. Can Twitter add more users to its platform? This is the big question. Okay, so looking tomorrow at the report of Twitter, we're not going to only take a look on, on the revenue. But we want to go specific. We want to take a look on the key numbers. When we talk about Twitter, okay, the main thing we want to check on Twitter is whether they have new subscribers now, which is the key number because this is their future. The thing is that Donald Trump, the President of the United States, since he was announced, nominate and during his campaign to be a president, and right now, as the President of the United States, he tweets everything. When he talks about Iran, he tweets. When he talks about the trade contracts with other countries, he tweets on the everything, and everybody's reading his tweets and publish it on TV and all the social networks. Okay, he tweets about everything, about the tax cuts, about rebuilding America, whatever he has to say, tweets on Twitter. Now, a lot of people are reading it, and maybe because of that, and because of other celebs doing the same thing, we might expect more people to open Tweets accounts. More users, okay, might bring a good report for Twitter. So pay attention to this tomorrow. This is about stocks. Any questions about stocks, about the earnings season? It's going to end in about a week. So if there's anything you would like to ask, go ahead. All right, let's talk about oil. All right, situation of oil inventory. Okay, what's going on with oil these days? Okay, you go to CL, which is crude oil. Crude oil, let's put it daily. Okay, this is a daily chart. I just put a support and resistance line around here. As you can see, we had an OPEC. You know OPEC? Okay, let me talk about OPEC. OPEC is their organization, okay, of 14 countries, the big oil leading countries in the world. Okay, we're talking about South American and usually mostly Arab countries such as Qatar and mostly Saudi Arabia, right? 14 countries. They're responsible to more than 73% of the global oil export in the world, all right? So we're talking about countries that affects the market strongly. Okay, the oil market, okay? For example, at the end of November, you see November 30th and at the end of November, the beginning of December, they had a meeting in Vienna, okay? Vienna, where Iran, you remember during Obama administration, the Americans have decided to take down the sanctions of Iran, and Iran could export oil by itself. Talking to the Saudis, they told him, listen, you product a lot of oil, which means the prices are very low. The price got low all the way to $26 per barrel. Okay, if you look at it monthly. Okay, it hit 26 down here and then started to come up. Okay, so actually what they said, the Iranians, is they want to be in the competition as well. Okay, so they talked about cutting production, and then the market reacted. Oil started to go up. Okay, less oil means prices, like everything, okay, it's going up. Okay, so just for you to understand, and then it got stuck. So the thing is, the event, okay, oil inventories is an event that takes place weekly, every week at Wednesday at 3:30 GMT time, which means it took place about an hour ago. And this event represents the weekly US supply change of oil, okay? It measures the number of barrels in the US firms, okay, compared to last week. As long as oil keeps trading close to $50 a barrel, which right now it's around 52, 51.5, $52 per barrel, the event should have a strong impact on the prices of the commodity, okay? Back in the days, let's take a look again on the monthly chart. Back in the days here, 2008, oil was traded around $140, $145 per barrel, which means all these OPEC countries, the oil countries that are very, very rich, like Saudi Arabia and Qatar, they made a lot of money 3 times more than today, which is $50 per barrel. So they didn't even pay attention to the US inventories oil because they didn't care. They made a lot of money. Today, when oil is traded very low at around $50 per barrel, okay, this weekly event is very effective. Okay, so people started to pay attention to this and trade according to this. Now the OPEC cut production, as I showed you, move has not yet proven itself, right? The meeting was at the end of November, as I showed you. We expected oil prices to go all the way up to $70 and $80 per barrel. It didn't happen. Stayed around 50 something. So it didn't prove itself. Traders can diversify their position using correlation tactics. Okay, you can trade on the CAD, Canadian dollar, Hong Kong, the NOK dollar, and the ruble. These are big, very strong countries that export oil, and their currencies work the same correlation with oil. All right, just to show you, the event took place an hour ago. Tell me if it affects the market or not. All right, we're talking about, this is 1 hour, this is the second hour right now. Oil prices after the downtrend are going up like crazy. Okay, and there's a phrase in the market we say, the trend is your friend, hug him. All right, so right now the oil is on an uptrend, okay, and it still has all the way to the resistance line around here at 54.5 to go up. So this event affects the market strongly. Great, you see, if this is not an opportunity, I don't know what is. Okay. Things to notice during the stocks publications, the earnings reports. We talked about it. Market sentiment right now booming up. Price of the VIX, pay attention, right now traded very low. Not a lot of fear. Everything is very certain. Pretty easy to trade these days. Everything is going up. Support and resistance per asset. If you want to be a professional trader, so you got to know how to combine the technical analysis with the fundamental analysis that I'm teaching you here. And I did it on past webinars. I'm going to do it on next webinars talking about the earnings season. And of course the EPS, right, the earning per share, taking the whole revenue of the company divided by the number of shares, and the key numbers. With Disney, we talked about cables, Twitter tomorrow, new subscribers, Apple new iPhones, and so on and so on, except for the revenue. And of course, good luck, guys. Any questions? Anything you would like me to clarify you didn't understand? I love to, and look at the oil prices. It's beautiful. Let's put it on 15 minutes. Whoever buys oil right now makes a lot of money. Okay? All right, any questions? Okay, I'm going to be available on my email address, on my email, all week. If you have any questions, you're more than welcome to write me down. Of course, contact your account managers, okay? Ask them about what we see here with oil. Ask them about the earnings season that is going to end. You're more than welcome to join me every Wednesday at 8 p.m. or 4 p.m. to the weekly webinar talking about the events of the same week. I would like to thank you very much for participating, and hopefully to see you here next Wednesday and every week. This service is for free and it will always be. All right? Thank you very much and have a great one. Bye-bye.